What's up, everybody? Welcome to the March 9th, 2026 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by IndiWealth. Today, we're going to get right into those hot button issues, so let's get started. First, we're going to talk about oil. Number one is we've gone from $71, where I think I talked about this last week, to over $100 as of today. So the price of a barrel of oil has gone up immensely fast. This is what happens when you talk about oil shocks. This is why they call them shocks. This is what happens, is that it can go very, very, very fast on one set of circumstances that really changes the game. So if you remember last week, we had, the Iran conflict had started before the market opened on Monday, and the market had a fairly muted reaction to it. It was up about 6-7%. So, not no reaction at all, but it was coming from a very low base and it rose up slightly. What you saw happen this week was just continuing escalation of the rhetoric about how long this will take, how aggressive we're going to be. Iran came out with their new leadership, which is basically just legacy of the old leadership. It's his son, I believe, if I'm not mistaken. So there is a continuation that suggests that there's no near-term resolution to this. So President Trump has had conversations about abject surrender being the only option. The Department of Defense have talked about an extended time frame and an uncertain time frame. And then you combine that with the Strait of Hormuz. If I'm saying that wrong, I probably actually am. Being closed down for the most part, or at least dramatically shut down. And that led to production being shut down by some areas, or at least curtailed. So a lot of things happened in a week with regard to oil prices, oil distribution, oil production, and the resulting shock was a dramatic acceleration again to $100 oil. This is not good. I'm not going to sugarcoat this. This is going to be kind of my Empire Strikes Back episode, and the effect of it's going to end in bummers for most of this stuff, because this is not a really good sign for the overall economy. When you have an oil shock like this, and one of the things we've been talking about here is affordability concerns, whether that's real or imagined, in certain regards, the sentiment is what matters. And you have this perception of a K-shaped economy where the mid to upper tier is doing well and the mid to lower tier isn't doing so well. And, inflation's not under control. This is not going to help it. Oil goes into a lot of things. It's an input cost for almost every business on the planet in one way, shape, or form. So when you have that coming through, yes, the Federal Reserve ignores the oil and food prices for the most part in the actions they're taking and when they look at what they're calling core inflation. But everyday Americans can't do that. They don't have that capability. That oil price is going up. If your gas price goes up $1.50 per gallon in a 3-week time frame, that acts as an immediate tax on the things you can consume outside of that. So I can't sugarcoat this. The only sugarcoating I have is this these shocks tend to not have long-term sustainability unless we see dramatic escalation from this point forward, right? So the market is now saying, well, we're going to be in this longer than we thought. The question is how long that's been put into place and what we can see. You're already starting to see some estimates of $150 oil. Could it happen? Absolutely. But again, those draconian estimates come out typically during a shock like this. We'll see how far and how fast this goes, but going from 70 to 100, again, this is just another strike against the U.S. economy that frankly makes me a little nervous that we could start teetering over, especially with point 2 that I'm going to talk about right now. And point 2 is jobs. The job numbers came out last Friday, and I think they were bad. We had a decline. First decline we've had in a very long period of time. So we had a decline in the job environment. Were there some one-time things that caused that? I think yes, absolutely. But you also did see revisions come down from prior months. So it wasn't as robust as last couple of months had suggested, and this one was not great. Now, could it get revised upward later? Absolutely. But what we're seeing here is, again, that kind of teeter-totter on that is that we're not seeing sustained trend of upward, acceleration in the job market. And there's enough in this report to suggest that sluggish growth environment is probably going to continue here for a while. especially now going back again to one, when you kind of mix these together, is now businesses are saying, well, my input costs have just shot up, and it could be a month, it could be 3 months, it could be weeks, who knows how long it's going to be. I wasn't all that jazzed about hiring before, and I'm not all that jazzed about it now. So I don't think the environment from a perspective of the job, the job employer, has gotten massively better to where they're going to start saying, I'm going to hire left and right. So I think combined with these is that you have a pretty bad stew at this point right now. Again, it's a short period of time. It could be, it could reverse itself. But where we are right now, this is what I've been kind of concerned by with regard to the overall economy, because these can both have pretty negative sentiment conditions. I can't get a job right now. Nobody's hiring like what I want to do. Job transfer might be out. I might just hold where I'm at right now. I'm a little more worried about a job loss than I was before. And now I've got $30 more expensive oil, which is probably $1.50 more at the gallon, per gallon at the gas station. It doesn't lead to great consumer sentiment. Again, could this flip? Absolutely. That's what makes me worried right now. We've been talking about this since the beginning of the year, is that low oil prices has been a benefit to us. If that flips the other way with already the affordability concerns we see, we could see a sentiment shift that could have some serious negative effects on consumer spending, which again drives our economy. We're a 70% services and spending economy. What we spend is how we grow. And if we're not spending, we're not growing. So be cautious, be careful. I'm not suggesting anything. I'm certainly not predicting a recession at this point right now, but these are the conditions that could put us in there. So I'm going to keep watching very closely. Turning to number 3. We talked at the beginning of the year about recurring revenue models. And one of the areas we were very wrong about recurring revenue models is software. Software is a highly recurring revenue model, and those collapsed in the early part of the year. But other areas we've seen with regard to that recurring revenue model have shown as surprisingly strong. And one I'll talk about here is telecom stocks. If you look at Verizon's up 25% year to date. T-Mobile's up 9%. AT&T's up 15%. Those are the big 3 telecoms. There's really not much for players after those 3. Those are really, in a market that's down year to date, that's a really strong return. You've also seen it in certain areas of consumer staples have really gone back. Walmart just continues to flat the shelves. Costco's done really well after a really difficult end of 2024. End of 2025. I know my years. But you're seeing from that perspective is that some of these revenue models and these recurring revenue models are showing some resiliency as the Mag 7 have had some difficulty. So there are some certain areas that have been surprisingly strong. To be completely honest, telecom got so cheap that this might just be a reversion of that. And they are throwing off a lot of cash now. But if you're looking at the business models and saying, this is what I want to be involved in, I have a little bit harder time with that. Could you say, I think the yield from these are going to be fine. I'm still not paying a big multiple, so I'm okay with holding it because they're not spending like crazy. So they're going to be returning cash. They're not in any danger of tipping over from a debt perspective. So I'm okay with owning these while, these other names may have worse times ahead. That's a very valid argument. The value argument, the dividend-oriented argument, totally get that. Could continue for the rest of the year. But I'm just saying from a business perspective, there's not a lot that has changed here. And these 3 names tend to be just share stealers from one another in a pool that's not growing super fast. So just be careful from a business perspective. Again, stocks can work even if they're low growth stocks or even no growth stocks. They can work in certain environments, and that may be, we may be in 2026 in that environment right now. And they've certainly shown that. But from a business perspective, we're still a little bit cautious on what we would pay for these kinds of companies. Lastly, in turning to number 4, air travel. I tend to like to be a travel, and my travel is probably going to kick up here. I don't tend to go many places during the winter time. I tend to hibernate, which is kind of crazy. I should go somewhere warm since I don't like winter that much. But nonetheless, air travel right now does not seem like the most fun thing to be doing. And the reason is we're still in a partial government shutdown. Nobody talking about it, but we still are. And so TSA agents are being paid fully at this point right now. I read an article on CNBC this morning about them and the subsequent delays we've seen from air travel. For the delays to get through security are sometimes hours on end at this point right now. That's not fun. And then you combine that now with, again, oil just shot up from 70 to 100. That's going to have an effect on pricing for travel. If that continues to be raised, that's an input cost for the airlines who have to pass some of that through. They're just not profitable enough not to. So they have to pass some of that through higher prices. So you're going to pay more, and your service component at this point right now, probably the biggest pain for most people is getting through security to get on the plane. Is now worse as well. So I'm coming into travel season for business. I have to go to a few places, a few conferences. Not probably going to take much for personal travel at this point right now, just simply because, again, it doesn't sound like the best environment to be doing so. We'll see. Maybe I'm wrong. Maybe it changes over really quickly. We get a shutdown. This Iran conflict goes away, and air travel gets fun again. Right now, it doesn't seem like the best environment for doing so. So that is my update for this week. Sorry it was such a bummer. We'll hopefully have a little bit better news for you next week. But tune in next week where we'll talk about the next hot button topics. Until then, thank you very much. Take care.